welcome everyone. Here are my fantastic panelists. Maybe I will start by introducing them as they are the stars of this session. So we have here John Versentford, Head of the Office of Anti-Corruption and Integrity of the Asian Development Bank. We have Berna Guggensi, Associate Director, Project Integrity, Office of the Chief Compliance of the European Bank for Reconstruction and Development. We have Huma Yusuf, Director, Business Integrity and Corporate Governance of the British International Investment, and Caroline Eriksson, Head of Social Active Ownership Department of the Norges Bank Investment Management. So, incentives for business integrity. Last year was a big year for incentives for business integrity. I work for the UN Global Compact. As Vanessa said, this is the United Nations office that focuses on the private sector. And last year in September, at our flagship annual event that takes place in New York, we facilitated a call to action from business to government. And this call to action had 5 points. It was a one-page high-level document, and one of them was precisely incentives for collective action. Another one was on having more corporate sustainability criteria in government decision-making processes, such as public procurement or investments. So you see, I'm very connected to incentives. This call to action was signed by companies from 91 countries and was presented in December at the Conference of the State Parties to the UN Convention Against Corruption. So this is the big anti-corruption COP that happens every 2 years. And something wonderful happened there. We received a response to our call to action from governments who committed to adopt incentives for business integrity all over the world. 190 countries, to be exact, will now adopt incentives. So next, we produce a guide that we launched in March with UNODC and the OECD to support governments in this endeavor of adopting the right incentives, sanctions, a right balance between the two, and most importantly, to engage the private sector when developing these incentives, especially through collective action. So these incentives, not only government can develop and implement incentives, companies can do it too through their supply chain, for their employees, for example. Then we have other players in the field too. But today, we are here to explore the role of development banks, international financial institutions, and other investors in precisely incentivizing, motivating, and ensuring business integrity. So as you may know, maybe to set the scene, multilateral development banks are essential in providing support for development projects. Normally, it's financial support. Normally, it's through loans for public borrowers that use these funds to hire works, services, or products for a development project in their countries. So in this process, both the borrowers, but also those companies that they hire through public procurement systems, they are vulnerable to corruption. The projects are vulnerable to corruption through the life cycle. And it's in the best interest of everyone that, of course, the funds, they reach the intended purpose and beneficiaries. So that's why our multilateral development banks and international financial institutions are interested in securing the highest standards of integrity possible. And so you will be happy to hear that recently 6 multilateral banks came together and issued the general principles for business integrity programs to let companies know exactly what are those elements we are looking for in terms of business integrity. Risk assessments, of course, the management, the integrity policy, reporting channels, whistleblower protection, how to deal with the violations, training, communications, the typical elements of a compliance program. But they have gone even one step further by harmonizing their processes, by coordinating their efforts. So, let me stop speaking now and maybe ask John. You work for the Asian Development Bank, which has been involved in this harmonization approach. Can you tell us about that? What is it? How does it work in practice?
Okay, thank you very much. I hope you can hear me. Yes. First of all, I'm delighted to be on the panel today. I've really learned a lot in the last few days about collective action. What I would like to talk about first today is a bit how we have taken some form of collective action, somewhat different than perhaps the form of collective action that many of you are used to. But it actually has its roots in the 2000s when Lisa Miller was explaining the history of collective action and explaining how collective action as a concept existed already longer in social science, but really started to gain momentum in terms of applying it to the fight against corruption in the 2000s. This is when the multilateral development banks, of which Asian Development Bank is one, started to also coordinate their efforts in the fight against corruption. And this is quite important to us. If you look at the resources that go into development projects, last year the bank, Asian Development Bank alone financed about $23 billion to development projects. It brought in $16 billion of other resources from co-financiers. And we have just approved changes in our capital requirements that will allow us to deploy another $10 billion annually for the next decade. So that's about $50 billion a year from ADB alone. Together with the 6 other MDBs, we're talking about hundreds of billions of dollars of project finance each year. And these are public resources, and we have a responsibility to make sure that these are deployed for the intended purposes, that they reach the intended beneficiaries, and these resources are not diverted towards unsavory purposes. So we have a huge interest as an MDB community in ensuring the highest ethical standards on the use of those resources. So in the late 2000s, we developed the IFI, the International Financial Institutions Uniform Framework for Preventing and Fighting Corruption. And that has, under that framework, we have sort of set expectations for the thousands of companies and individuals that are participating in projects by articulating exactly what practices are prohibited. We have the harmonized definitions for corruption, fraud, collusion, coercion, and we're working on harmonizing a number of other definitions. Related to that, we developed uniform principles for investigation so that we all treat subjects of an investigation in the same manner and with the same standards. Then a few years later, we decided to increase our impact by introducing cross-debarment. And simply stated, it means that when an entity or an individual is found to have committed fraud or corruption on the project of one of the multilateral development banks and is debarred as a result, then that debarment will be recognized by the others and the entity loses its ability to participate in projects of any of these MDBs, which is a huge deterrent. We developed common principles for corporate groups so that when an entity is debarred, we make sure that all the group entities that could be used to circumvent that sanction are also debarred. And again, these entities can become subject to cross-debarment. We had uniform principles for sanctions. How long? What are the aggravating circumstances? What are the mitigating circumstances of a sanction? Again, to make sure that we create a level playing field and that we all treat these institutions in the same way. Now, you already referred to the general principles for business integrity programs, and I think this was really sort of a new dawn for the multilateral development banks in the sense that our collective action in a lot of ways until that time had been aimed at enforcement, deterrence, in the way that I just explained. But with the MDB general principles for business integrity programs, we now sort of create, not only set out what is prohibited conduct, we create expectations for the standards that we would like to see in private sector entities that are participating in MDB-financed procurement or are recipients of MDB financing as a borrower or investee. And I think this is quite critical. The principles are broadly framed, but they really set clear markers for what we would like to see in terms of the integrity culture tone from the top, a code of conduct that should be applicable to all employees, the compulsory training, reporting mechanisms, etc. But at the same time allowing for sufficient flexibility to ensure that businesses can tailor them according to size. You cannot expect a small and medium-sized enterprise to have a full-fledged integrity compliance program that you would expect from a multinational corporation, etc. So these are, I think, some examples where the MDBs have really come together and have been able to make a difference. I think if you look at the cross-debarment list, we have 1,000+ entities that are commonly debarred by all the institutions that are part of that effort.
Okay, so that is an outstanding work. I said, first, on one hand, laying down the rules of the game. This is what we want to see. These are the general principles you can follow. We will support you in this endeavor. But also, we coordinate so that if one company does corruption or misconduct, there is no escape. We communicate, we coordinate, and we all know then to apply the same standards to everyone. So that takes me to our second panelist, Bernard. The European Bank for Reconstruction and Development, where you work, was also part of this harmonization process. So from your perspective, how can multilateral development banks ensure that business integrity is present and so that the investments really reach the purpose and beneficiaries?
Thank you, Christina. So before responding to your question, I think it makes sense to give a bit more context around EBRD and what we do, what's the mandate and mission. So European Bank for Reconstruction and Development, EBRD, was established in 1991 with one important mission: to foster open market economy and to make sure that we have open and competitive private market players in the economy. So this is the transition impact that we want to always achieve, and it's very important. EBRD focuses on a specific region also, so it's Eastern and Central Europe, Central Asia, and Northern Africa, and now expanding to Sub-Saharan Africa also, with 6 countries. We have mostly private operations and also a small portion of public operations with the municipalities, with SOEs, and with the governments. So I think there is an important role for MDBs in this context. Just like other MDBs, EBRD is not subject to national laws. It's not registered in any of the national jurisdiction. It's not subject to any national or supranational regulatory supervision. So that puts MDBs in a very important place where there's more responsibility to set the standards, not only at the international best standards in its operations, but to surpass that international best standards and become a self-regulated, as we like to call it, self-regulated institutions where MDBs will become the ethical standard setter. So that's the, I think, important collective action mission we have for the MDBs, to set the standards at the highest possible place and make sure that our operations comply with those. So just like other MDBs, speaking for EBRD, what we do to foster that, we of course work on preventing and defining and deterring fraud and corruption in our operations, also within the banks client's internal operations. But I want to focus more on the preventive side, because this is very important for EBRD, and it's the key focus area for EBRD also. So I want to talk a bit more about the ex-ante due diligence we do in our operations. This means before we engage with the clients, before we put EBRD's name or before we put our name to the project itself, we conduct very thorough ex-ante due diligence, and this is very important and core. And in there, we try to set the, again, best standards possible, and this is, I know, also for the other MDBs is the case, so this puts a very important role for MDBs from that front. So what we do, it's beyond the regular KYC checks, it's not a checklist exercise for MDBs. We really thoroughly look at the source of wealth, we look to political exposure, we try to define the UBOs, and also we concentrate on around any proceedings, criminal, regulatory, or even allegations, and whether any substance to those allegations. So these are the topics that we really try to understand before we engage with the clients, so our public funds reach to the right beneficiaries for the right purposes. When we're doing that, I think an important example is we don't, as we're not regulated, for example, defining the shareholders in the projects, we go beyond the recommended percentages. We don't take 25 of FATF, for example, or some other best practices of 10%. We want to know all the shareholders. We want to know all the beneficiaries in the projects, and we want to set the standard in that level. Another important, I think, consideration we have for this ex-ante due diligence practices, how is the business integrity culture of the client or the counterparty that we're looking at? We try to understand the corporate culture, the business modus operandi, and whether there are any red flags that these are not in line with the standards that we want to see. I have a good example in the recent years where there was no criminal proceedings or no regulatory proceedings about a prospective client, but we gathered information from publicly available resources that there are lots of complaints about the business environment, about harassment, bullying, and also there were lots of complaints about the peers, competitors, that they are using very aggressive business means and they're not acting in line with what we would expect. For example, we didn't proceed with that project, and then years later we were engaged to reform, to make some reforms and change the client, and then we were comfortable to engage with the client. So these are the standards that we try to set and make sure that we have the targeted and the right purposes and the beneficiaries.
That is excellent. You spoke a lot about setting the standards, and I think that was achieved through the principles, the general principles, when we tell companies what we are looking for in terms of a compliance program that is effective. And John, you said this standard, these principles have to be adaptable because there are companies of different sizes and sectors, and obviously we need to take that into account. So that takes me to my next question for Huma. You work for the British International Investment. So how do you create awareness in your portfolio, the buy-in for business integrity, but especially when it comes to early stage startups or smaller organizations, and how does this align with the impact you're looking to make?
Yeah, thank you for that question, and thank you to the Institute for inviting me to speak here today. So I'll also just quickly explain a little bit more about BII, formerly known as CDC Group, before I get going. So we're slightly different from the Asian Development Bank and EBRD in that we are a development finance institution that invests only in the private sector. And we are an impact investor, which means that we are making investments in the private sector with an aim to sort of meeting the SDGs. And with that comes a responsible investment mandate. So our investment is conditional on extremely high standards of business integrity and good environmental and social risk management at the companies and projects that we will invest in. And so a lot of our work resembles what Berna has just described. So there's a lot of pre-investment due diligence that goes into sort of track record, reputation, et cetera. We're also regulated by the UK Finance Conduct Authority, so there's additional pressure to get that 100% right. But beyond that, we have a big emphasis on building out business integrity, risk management systems at our portfolio companies. So we really emphasize that aspect of the internal control environment, the corporate culture, et cetera, and get quite involved in sort of building that up. And the requirements can be quite extensive sometimes. The ask can be anything from, implementing a new anti-fraud IT system, or establishing an audit and risk committee for a newly formed board, or making a very senior and expensive compliance hire, someone who's at the exco level, et cetera. So how do we get buy-in for these kinds of asks? So I'll tell a little bit of a story of how our approach for this has changed. So historically, I would say we were taking more of a risk management approach in the sense that John started talking about, where we would go in and say, you are taking British taxpayer money, and we need to make sure that this goes to the right place, that it's used for its intended purpose. And so there was a bit of a stick approach, right, which was to have a set of business integrity requirements for controls, policies, representations, warranties, et cetera. It was a bit more legalistic. But the goal there was to protect our investment. But what we found through experience with our portfolio over the years is that this was engendering a little bit more of a tick box compliance approach, that we've done the few policies and here we go. And so over time, I think we've learned from our portfolio and shifted a little bit more to an approach where we're trying to build buy-in through two different ways. So the first is that we're trying to build this business case for business integrity. And because we're working in the private sector, we really emphasize the fact that there's a growing body of evidence that shows that where businesses have good corporate governance culture, where they have a good business integrity risk management system, they have better financial returns, better performance, better valuations, et cetera. And we take that story to our companies, and we also sort of make the point that, look, if you are an impactful business, right, you're saying that we are going to do recycling to protect the environment, or we're going to be a textile manufacturing firm that builds out a gender-inclusive workforce, et cetera. So all of these are efforts to meet the SDGs. But if you have a major business integrity incident, like a fraud or a fine or litigation that sort of upends the entire business's feasibility, you're not achieving that impact. So we've really sort of made that point that to also have the impact outcome that you want, you need a good business integrity approach. But we're now trying to take that even one step further to make the argument that good business integrity is, in fact, part of that impact that you are delivering. And so we, 2 years ago, launched a partnership with Transparency International in the UK, which is one of our first ever initiatives to work with a CSO in this space. And the goal of that initiative is essentially to put anti-corruption right at the heart of impact investing. And what we want to make is this argument that having good integrity, having a good corporate culture, having good integrity and anti-corruption risk management processes is part of your impact story. It's what you are doing to improve the market conditions, and it speaks directly to SDG 16, which through our research with TI UK we found is the least addressed sustainable development goal by any impact investor. So we're trying to sort of bring that back up the agenda. And then very quickly, just to wrap up, I mean, how do we do this for the early stage companies? Because obviously in our investment portfolio, we have everything from the 5-person startup through our venture capital program, all the way to large infrastructure projects. And so there's a couple of things that we really emphasize. So the first is this idea that business integrity risk management has to be proportional. And so we are really doing an approach where we sort of lay out a series of tiers for how you need to think about business integrity risk management. There is a core requirement for BI standards for all our investments, doesn't matter what size or scale they are. And those are just a very simple set of initial sort of policies and procedures that we ask for sign up to, so like an ABC policy, a sanctions approach, et cetera. The basics as this community would think about it. But then we also have risk-based requirements where we work with companies to do do business integrity risk assessments and say that let's find those areas that we know that your business model, your operations will lead to exposure, and let's address those. So that might take the form of a related party transaction approach for family-owned businesses that have a group structure, or it might be that we're doing human rights due diligence and monitoring requirements for those of our investees that have solar supply chain exposure, just as an example of what a risk-based approach looks like. The other thing that we're doing is phasing our business integrity risk management requirements. So we're saying that there will be moments in time in our investment journey where, for example, a change of revenues, right, an increasing amount of revenues, or an increasing size in your workforce, or a shift from being an unregulated entity to moving into regulated activities, that each of these are milestones in a private sector journey that would lead you to go back and change and adapt your business integrity risk management approach to fit your new profile, your new resources, your new capacity, etc. And one of the things that we're trying to do increasingly is to partner with other DFIs in delivering this kind of support for our portfolio. So just as an example, we partnered with the Dutch development finance institution, FMO, just earlier this year to publish a very cool tool, I think, for the venture capital space. It's a stage finder tool, which is essentially a way for companies in the sort of venture capital startup early stage journey to go in and benchmark themselves against what stage they are in terms of business size and risk profile. And then it makes recommendations for what kinds of business integrity and corporate governance measures a business should have in place at those early stages to help someone chart a journey through that. So I'll just quickly conclude with what I think is missing from all of this, though, which is the collective action in some ways, which is that development finance institutions still don't have a harmonized approach to business integrity standards or requirements, or even in the reporting that we're asking our portfolio to do. We sort of informally try and echo what our MDB colleagues are doing. So, for example, BII's policy on responsible investing looks a lot like the general principles, but it's similar but different. So I think there's a lot of work that we could be doing to sort of have a really truly harmonized and consistent approach to make it easier for the private sector to know what the ask is.
Excellent. I love how you said that you have to put anti-corruption at the heart of your program, because fighting corruption, because business integrity is the enabler that will help the company achieve other corporate sustainability goals. And about SDG 16, I agree that it's probably the least understood of all SDGs by companies. At the UN Global Compact, we developed a business framework for SDG 16 to help companies understand how they can support each one of the targets. And this year, we launched a self-assessment tool, even to support them in their journey to go beyond corporate compliance and governance as we know it as a traditional one, to also assess the impact they have on societies, on the environment, but to take it one step further and also contribute to the ecosystem where they work, to public institutions, law, systems, in line with SDG 16. So very interesting. And finally, I'm coming to Caroline. So similarly, Norges Bank Investment Management has also published anti-corruption expectations document similar to the Tenor principles. So again, this is a guidance note for companies reporting on anti-corruption efforts. This was published with the Basel Institute of Governance. So how do you go about incentivizing, motivating companies to better address corruption risks?
Great, thank you. And let me also say thanks so much for having me here. It's great to hear the conversations and to meet others who are working in the same space. And just to also take a step back and say, what is our angle into this as coming from the active ownership area of NBIM. So NBIM, for those who don't know, manages the assets of the Norwegian Sovereign Wealth Fund. We're a global investor, invested in 9,000 companies across 70 markets. We're invested mainly in listed companies and bonds. Only in listed companies, mainly in equities and bonds. And we are never a majority investor. We own about on average, 1.5% of the listed companies in the world. So we have a small, holding in each company that we're invested in. But of course, with the size of the fund, that adds up, right? So our angle into this is as a financial investor. We have responsible investment as part of our mandate, but I think it's really important for us that the work to address anti-corruption and fraud, it really starts with that belief that corruption is detrimental to societies, to business. As an investor, that also will over time damage shareholder returns. And as a fund that invests for the Norwegian people, it's really important for us to be transparent and predictable as an owner. When we speak to companies, we want them to know what we expect. So as you said, we have these expectations, which is the basis for all that we do as an owner and shareholder. They start with, they are the starting point, and we publish them on ESG topics, on corporate governance issues, and on the environmental and social issues that are relevant to the fund. We published the anti-corruption expectations in 2018, and it really sets the stage. Like, we believe that good policies and systems to address on the topic of anti-corruption is the basis of responsible business conduct. That's at the heart of our expectations. And we want companies, all the companies we invest in, to have effective management systems, policies, and also report on their actions to address corruption risk. Our expectations are directed at the company boards because they are representatives as shareholders, but we also have regular dialogue with management and subject matter experts, compliance function, etc., in the companies we invest in. So to your question, how do we incentivize as well, as such a global investor? We think about our ownership at 3 levels. Because we're a global investor, we really benefit from good market practices and raising the bar across the markets that we invest in. If all companies, to level the playing field and have all companies have higher expectation for all the companies, that will benefit our investments over time. So we engage with standard setters and regulators and other market actors to help improve market conditions overall. Recently, a couple of my colleagues, to just give an example, went to South Korea and organized a corporate integrity forum with your colleagues in the UN Global Compact there. Basel Institute was also there, really sharing best practices, challenges, and learnings with companies in South Korea. We do this regularly also in other markets, and want to keep raising that bar, encouraging companies and other actors to share. That's sort of at the market level. The second level, it's the portfolio level. We integrate ESG issues into our investment decisions, and I'll come back to that later. But that really means that we think about also anti-corruption issues when we assess the risks and opportunities related to our investments. And we monitor the portfolio on a regular basis to identify risk. Are there controversies? Are there also underlying risk factors that we should think about connected to corruption as well? And we may make risk-based divestments based on where we see unsustainable risk over time. That means we will divest from companies where we don't believe in the business model and think the risk is too high. Finally, at the company level, which is really where the core of my work also is that we engage with companies directly, bilaterally, in ongoing dialogue. Of course, with 9,000 companies, we have to prioritize. We often prioritize the largest holdings where we see the highest risk as well. But we have dialogue with them about investment strategy, financials, etc. But as part of that, we also raise corruption issues. And we also vote at company meetings. Of course, we want to vote at all AGMs, and we may hold boards accountable if we see that a risk has not been managed well, which includes corruption risk. I think I'll leave it there.
Excellent. So we've discussed so far the expectations we have from companies, and also how we get their buy-in into this business integrity agenda. And it is important to have the right mix of incentives and sanctions. So that takes me to my next question for John. Can you tell us how can you turn a debarment process into an incentive for good corporate conduct?
Thank you. As I think is the case with the British Investment Council, the whole idea of incentives was initially focused indeed on deterrent and ruling out or excluding bad players, bad apples. And that's not just to safeguard the funds, but actually the reputation of the institution. Our shareholders are member countries, and if they don't feel the trust that their resources are going to be used for good purposes, we're going to use our ability to generate funding and to keep their goodwill and thereby undermine our own effectiveness. At the same time, we're a development institution, so we want to influence positive change in the markets where we operate. And merely excluding these entities that have breached rules is not going to, in the long run, be sufficient to make a positive impact. So we feel that remediation is actually a very important aspect of our debarment process, and this is where the general principles on business integrity programs have really sort of set a new standard that we can uniformly refer to as the MDBs when we are looking at rehabilitating entities that have been debarred. The normal sanction for debarment is the baseline is 3 years, but it can be actually much more if there's aggravating circumstances. Sometimes companies are not debarred, but they have conditional non-debarment, which means that they need to show certain improvements in order to avoid a sanction. So what we do in these situations is, rather than automatically reinstating a company after a number of years have passed, or rather than just releasing them from a sanction, we require them to demonstrate that they have taken steps to remediate the shortcomings, the internal controls that led to them being debarred in the first place. And using the general principles of business integrity programs as a sort of a reference tool, we develop sort of expectations that we set out in a letter to the debarred entity. And while they're debarred or while they're under a conditional non-debarment, they get a period of time to work on demonstrating that they meet those requirements. Typically what we want to see is evidence that there is a code of conduct, that this is applicable to all employees, that it's applicable to the whole group of companies. It should be adequately resourced. There must be compulsory training for employees, and the code of conduct does not only need to deal with employee conduct, but also the relationship with partners, suppliers, and subcontractors, agents, etc. We don't have typically the resources to actually then check if that is all in place. I know some of the other MDBs actually themselves, I know World Bank, Lisa's team actually themselves go then do due diligence on whether the business integrity program meets the standards. At ADB, what we do is we require the company to appoint a monitor. So the company will be appointed and paid by, the monitor will be appointed and paid by the debarred entity. However, the terms of reference that the monitor needs to fulfill needs to be approved by Asian Development Bank. And also the actual monitor themselves, we need to know that it's a reputable firm, and often it's typically one of the large law firms or one of the accounting firms that have a good capability in these areas that will serve as monitors. The monitor, even though it's engaged by the company, reports to us on what the standard of the business integrity program is and whether the requirements that we set out are fulfilled. this has been very successful. In the last 10 years, we've, I think, sanctioned about 386 companies, and in 109 of these cases, it was a debarment or a conditional non-debarment where we required sort of a certification of sound business integrity in order to be released. And we really have felt that this has made a positive change where the companies do not only see the merit in meeting these standards in order to get back into the game of the MDBs, but actually start to realize that this is a very good business practice all around and that it's good for their economic performance. So we're very pleased with what we're seeing.
So that is very interesting that you set the general principles, the standards that you expect, but then it seems you support companies even through debarment. There's a possibility of rehabilitating the company and you want to support them through that process. So, Bernard, the European Bank on Development and Reconstruction and Development, has a strong capacity building program for this specific purpose. How do you build capacity in your portfolio on business integrity topics? And if you can share some of the lessons learned.
Of course, thank you. So we talk about the ex-ante and preventive approach that EBRD has. And one of the elements in that perspective is also to review what the companies has in place in terms of compliance functions and compliance programs. And most of the EBRD's prospective clients, they either don't have any compliance programs or they have compliance programs that are in need of reformation in order to meet the international standards. And as EBRD, I talk about the transition impact and how important this is. This is a problem because we're an investor in these, as a lender also, in these projects. That's a concern if you don't have the specific controls in place. But beyond that, as a mandate-driven institution, as a mandate-driven IFI, we need to ensure that we provide the well-governed principles and the transition impact. And in order to achieve that, you need to have the best standards in place for the clients that we deal with. So for that purposes, we've been working on capacity building quite a lot. I know that all MDBs have the similar programs. So this is the focus that I want to have is more on the ex-ante side, what we do with the capacity building during the project and before the project, before we reach the sanctions side, and what we can change at that level. So the important thing is we do have anti-corruption action plans. We call them ACAPs. These are part of the EBRD's financing package for the correct clients that would make sense for those. In certain scenarios, we have concerns from the for the ex-ante due diligence that we conduct, and we determine that there are certain areas that they need to develop. So we might have some very focused ACAPs, or in certain scenarios, they just don't have anything in place, and there we can make a difference by putting these compliance functions and compliance programs in place. So I think that the key thing, this becomes a condition, an integrity condition for financing of the EBRD. And this goes to the committees and to the boards as a supplementary element in that project. So it becomes an important element to do this and to achieve that reformation so the clients can be dispersed and can receive the funds that are allocated for these purposes. Sometimes we also do the trenching in the lending process. Therefore, we also are able to control the implementation of these ACAPs, and we are able to just disperse after we are convinced that there is an implementation. And, for example, the compliance function is in place. It's functioning. The trainings are taking in place. So just the implementation and the monitoring of it. I think important also just to mention, this can be private sector investors, as we have 80% of those, and these can be small SMEs sometimes, these can be very big multinationals that we work with sometimes, but also it can be the public sector clients of us. So we have lots of also ACAPs in place for the SOEs that we work with in the regions that we operate in, and I think this tackles an important also concern on the curbing the demand side of bribery, because most of these SOEs might be implicated in certain corruption allegations and the proceedings, but are not in the center of it because they're on the demand side. But EBRD's work with these SOEs and the putting in place the ACAPs also, again, tackles this issue. Sometimes we have comprehensive ACAPs, as I mentioned, that we put everything in place from the code of conduct, training schedules, and risk policies together with the external. Sometimes we also have a focused ACAPs, which is important, I think, in today's context. Sometimes it might not fit for a small SME just to have a full functioning compliance department, but we can address certain ABC shortages and issues with focused ACAPs. Good examples lately is, for example, sanctions. We do see this a lot in some of the investments we have. And we put in place an ACAP focused on sanctions controls and sanctions functions. So we at least address that issue. We see this with donations quite a lot also lately. So we might have a focused ACAP, and we do have a focused ACAP in some of our clients, where we put in place donation policies and implementation of these. There's one good case example that I like to share maybe. In one of the countries of operation, which is a big country of operation for us, the first project that we wanted to do was a pharmaceuticals project. And the country was also quite a challenging jurisdiction, but also it's a challenging sector. And when we reviewed what they have in place, the ABC controls were not in line with what we would expect based on international best practices. So we had an ACAP program with that client that lasted a couple of years, and we were able to see a tangible outcome at the end, because they became a really reformed pharmaceutical client of ours, and they really attracted foreign investors, and they also were approached by their competitors whether they can use their model as an example for the others in the market. Maybe last thing to talk about the incentives, we also use this capacity building work we do as an internal incentive. So how that works is, as we try to achieve a transition impact, internally we do give scoring for all the projects and whether they will be receiving the impact that we want to have. And at EBRD, we managed to integrate these capacity building work and these ACAPs into that TI scoring. So it's a big incentive for the bankers and for our also internal staff to really think out of the box and come up with these initiatives together with us, because it becomes a scoring at the end of the day, and we would be achieved to be able to achieve a better transition impact.
Excellent. I see that your capacity building efforts are very strong, and even that you tailor those efforts to your clients. So Huma, what about the clients or the companies in fragile and conflict states? How do you deal with that? How do you support companies in their compliance journey?
Sure, thanks. I should say that BII takes a very similar approach to EBRD in terms of the action plan approach, where you've done a tailored assessment of a company's gaps and the risk profile, and you're helping them on this journey. So we also do sort of exactly the same approach. We call them BAPs, Business Integrity Action Plans. That's probably the only difference. But because we are an impact investor, we take a bit of a bigger view that we're trying to sort of share that kind of capacity building, not just with our portfolio, but as widely as we can, with the idea, as I said earlier, of sort of, the shared goal of SDG 16, sort of improving market standards across the board. And so one of the things that we're doing is trying to make our capacity building efforts as sort of ongoing and sustained in a market as possible, as well as publicly accessible as possible. So there's a few key components to how we're doing this. The key one is training. So we deliver in-person, in-market trainings that are tailored to specific market environments, specific regulators, et cetera, and we do this with our portfolio. In 2023, we were able to reach about just under 1,000 people who were associated with our portfolio in different ways across South Asia and Africa, which are the two main geographies where we invest. And we're trying to build those trainings out into the supply chain or sort of the broader relationship ecosystem. So where we're invested in fund managers, private equity, or venture capital, we're starting to now do these trainings one layer below with the boards and senior management of their of the companies that they invest in. So we're trying to have as much reach to that SME, early stage company level as possible in these emerging markets. And then we're also trying to sort of open up the trainings by, for example, doing virtual modules that can be more openly accessed, and we're sharing them with our DFI peers and saying, open this up to your portfolio and your supply chains in that portfolio as well. We're also hoping later this year to partner with the Basel Institute to do some train-the-trainer work in markets where we know training capacity is really limited, places like Pakistan or Ethiopia, yet to be confirmed. But we hope to do that kind of initiative as well, to sort of take our training materials and cascade them more organically in the markets. And then the other piece of this, which I alluded to earlier, is the development of guidance and practical toolkits, and I'll emphasize the practical toolkit part, because we know that these are practitioners on the ground in tough endemic corruption risk environments with usually very little training specifically in this compliance background and with resource constraints. So we try and put out a lot of materials. You can see them on our website. Everything is always publicly available. But what we're trying to do in the sort of FCAS and sort of especially complex environments is to bring more of ourselves to the table. So we are lucky in the DFI community for having quite a well-resourced first-line business integrity team. And we are able to work quite closely with investees to do things like detailed corruption risk assessments in our FCAS context, help them do stakeholder management and stakeholder maps to understand sort of where the key corruption risks lie. And then we sit with them under the umbrella of the sort of financial activity that they're hoping to undertake and say, let's see what we can do in terms of managing financial risk here. So now this is still sort of ad hoc, opportunistic. We're doing it where we can. It's at the pilot stage, I would say, this approach. But just as an example, we had a fund manager that was looking to invest in an energy project. And to get the permission to acquire the shares in that project, they were being asked for a massive bribe by the regulator just to give the approval for that ownership change. And so we all put our heads together and did more sort of local research, et cetera, and we essentially realized that there was another way to do this, which is if we turn the investment into a convertible debt facility, so they provide debt and then over time turn it into an equity shareholding, they wouldn't need that regulatory approval and they'd be able to circumvent that bribe request. And that took time and planning and lawyers, but that's the kind of thing that we're hoping to do more of, in especially complex or fragile environments, just to be able to enable investment in those difficult contexts. And what we're seeing is that more of the DFIs are starting to adapt this model of a first-line business integrity function that's out there working with investees in this capacity, with varying levels of resourcing across us, but increasing informal attempts to share knowledge and these lessons learned from these kinds of exercises. And then we're starting a little bit, and again, these really tough environments, to try and do a collective action approach. But again, this remains ad hoc and opportunistic, and it's something that, having spent a day and a half here, I really want to go back and find better ways to do this. But just again, as an example, example, we are working in an East African market where there's a lot of anti-competitive practices, and our investees are sort of being almost incentivized to engage in bribery as a way to sort of access a more level playing field. And so in that case, because we're in an investment landscape with other development finance institutions, IFIs, but also commercial impact investors who have very high business integrity standards, we've sort of got everyone together and said, let's lobby your local government representatives, your local embassies, and trade offices that are on the ground to go to the government stakeholder in that country and to jointly ask for a more even playing field for companies that have foreign direct investment. So we're starting to do this, and we hope to do more of it going forward. And so I would say for me, a big takeaway from this conversation and sort of engagement with colleagues is that I do think that there's more that DFI certainly could probably be doing in the space of collective action. What we do right now is best effort and informal. So just as an example, most DFIs will treat the MDB debarment list as a blacklist. So we also will not engage with anyone that's been debarred by the MDBs. But that's not sort of a formal institutional approach. It's just sort of internal informal practice. And we could probably do more to harmonize that. But I also think that there's opportunities for us to do better work, as I've described, amongst ourselves at the institutional investor level. There's probably more we could be doing to introduce our investees to each other, so projects and companies that are the beneficiaries of development finance or MDB financing through the supply chain could probably be working together in collective action initiatives. I think we could be doing more to either encourage or require our investees to be participating in collective action initiatives of the kinds that you've been talking about for the last day and a half as part of their business integrity risk management, so I'm definitely taking that idea away. And then I think we could probably be doing more to coordinate our sort of private sector work with what our own governments are doing from a public sector side. So I do think that there's some joining up to be done between the DFI anti-corruption business integrity mission and what our own shareholder or stakeholder governments are doing. And again, on this point, I hope that we can take this conversation forward again, hopefully through more work with Basel as we look. One of the things that we're looking to do is to put out more tools for SMEs on how to think about their role in collective action, especially in that high-risk emerging market context, and I hope that we can work with Basel on that as well.
Excellent. I think your work in fragile and conflict states take us back to SDG 16 again, which is the SDG on peace, justice, strong institutions, and as we said before, it's maybe the least understood by business, but it's maybe one of the most important, actually, for a business. Because when those three factors are in place, companies, investors can really focus on their business, on generating jobs, incomes, better quality products, services. So this approach that I mentioned earlier, promoted by the UN Global Compact, the transformational governance approach, precisely expands or merges corporate governance with sustainability governance, and then what we call global governance, aligned with SDG 16, trying to expand that G in ESG. So, Caroline, to finish our panel today, how does Norges Bank Investment Management integrate those anti-corruption topics in its wider ESG framework?
So it starts with the expectations that are on anti-corruption, which is a set of our broader ESG expectations and positions. And based on those, we take an integrated approach through the portfolio management and ownership of the fund. So the ownership team will work very closely with the portfolio managers that make the active investment decisions, and the investment risk team. So we work, for example, I will have a colleague in my team working on social issues, including anti-corruption, that sits with the portfolio manager in the healthcare team or with the tech team. and with the ESG risk monitoring team on the investment risk side. And they will share information, have meetings together with companies, whether they are part of ongoing relationships or meetings with companies they might consider investing in. So it's really about sharing that information and addressing the risks that come up in investment analyses through ownership as well. One example of that is these strategic board dialogues that we put a lot of work into having, and it's a big priority for us. And that's really with the top holdings of the fund. We want to discuss strategy every year with the board, and and other strategic and material ESG issues. Anti-corruption comes up in these dialogues. We want to, be able to discuss where relevant, of course, these issues with the top management and board members of these companies. We expect them to have oversight to make sure that there's risk management and good reporting on behalf of these companies that we invest in. Because we think that makes for a better business in the long run, return to shareholders, and we use that information again in our analyses. And I want to mention two more points, if I can. Homa and others mentioned, tools and contributing to learning and awareness raising, and I think that's also an important part of our approach, so we don't have an impact investment mandate. We think that it will benefit also financial investors if we help build competencies and learning. So another way we've done this is, for example, in partnership with Basel, to publish a guidance together with companies in the healthcare sector on what does better reporting on anti-corruption look like? How can companies report better on the effectiveness of their programs? So in that sense, we're also trying to contribute and help improve shared learning, collective action, and improve practices. And finally, to end with the stick, I guess, we have ethical guidelines for the fund, which is as part of that integrated chain of tools that we think of that we use to address ownership in our investments. And those ethical guidelines, they encompass anti-corruption. There is an independent council on ethics that is appointed by the asset owner, Ministry of Finance, which monitors the whole portfolio of the fund and may recommend exclusion of companies where there is an unacceptable risk of corruption, for example. And this process is on an ongoing basis. It's in parallel to our ownership work. And the council recommends exclusion or observation of companies to the executive board of Norges Bank. Once that decision has been made, the whole recommendation becomes public. It's published on the website of the council and the bank, and it really is part of that transparent approach to the fund, to the management of the fund, and I think is an important part also of our integration of these issues overall.
Thank you so much, Caroline. I'm very impressed with all the efforts from multilateral development banks, international financial institutions, and other investors to really support business integrity. I see that, obviously we know at this point that fighting corruption is a multi-sectoral, holistic fight, and that is what we need as an approach. So I'm happy to see that from your front, you not only have defined the principles and the standards that we require companies and borrowers to comply with, but you're also supporting them through capacity building tools, collective action. So now I want to open the floor to the audience to see if you have any questions for them, because we still have 9 minutes before Caroline loses her flight. So someone, I think, has a microphone that they can, maybe we have one here in the front and then in the back. Okay, in the meantime, Lisa, you have a question?
Thank you. So I'm Lisa Miller from the World Bank Group. I'm just going to make a shameless advertisement. Along the lines of the learning tools and the guidance tools that were discussed, the World Bank Group, through a generous grant from the Korean government, has developed an integrity compliance learning platform. It is publicly available. There are guidance tools. We will be adding the one that was just mentioned under our resources. So there are resource materials, guidance tools, and also online learning programs to help companies develop integrity compliance programs. There's a tool coming online next week that is focused on SMEs who are looking to put in place integrity compliance programs. And by the end of the month, there will be a tool on integrity and risk management for public officials that will also be available. And we have brochures outside on one of the tables. So thank you for your patience.
Thank you so much. I think we can go back to the gentleman in the front.
Yeah, so much better. Thank you very much. I'm Kent from Fight Against Facilitation Payments Initiative. And I'm really pleased to see you here because we often talk about the representatives of the money, right? And the power that you actually have. So here you have also a large community of really passionate and very interesting collective actions. And I would like to ask you the simple question, do you have enough information of the capacity that is available here? And if not, how would you like us to provide you with that capacity information?
Who wants to take the question?
I can take it. So I thought I had knowledge, and then I spent yesterday here and realized that there are so many amazing initiatives and how tailored they are to market, to sector, to type of corruption. And I have left with exactly this question, which is how can we better know what's available on the ground in the countries where we invest so that we can connect the dots with our investee projects and companies. And I would say that I would open the invite to you is to sort of become aware that we exist and we have regional offices in all the countries where you're working, and get in touch with them and let them know that you exist. Because to be honest, right now the approach is very manual in that when I travel for a due diligence trip or for monitoring visits to our portfolio, I'm literally sitting there and Googling anti-corruption society in, Zambia. And that's not a very efficient way to do it. So I would invite you to get in touch with sort of certainly DFIs, I think, are a good place to start, offices on the ground. And then the other thing that we're trying to do is we are trying to do these partnerships, and recognizing that there was this gap is where we've got this Transparency International partnerships. We've been trying to get TI UK to introduce us to other chapters. We're hoping to work more with various other, Basel for one, but various other partnerships. And we're hoping that through those partnerships we get more opportunities like this to learn and create some kind of map. But I think that's the idea essentially that I'm taking away, is that the DFIs need a map of who's out there doing what in the markets where we invest and where does it overlap. And that would have to be an internal exercise at our side. So that's what I'm leaving with.
Thank you. And I see that Sabine, you want also to ask. We have 5 more minutes. We can do this.
Well, 5 minutes for 15 years. Sabine Zindera from Siemens, and it is rather a comment, not a question. I mean, where do we collect all the knowledge? And that is the perfect moment to thank the Basel Institute for running the B20 Collective Action Hub, which was created in 2013 and which collects, the collective action initiatives, which shares the knowledge for the inspiration for many more to come. And I just wanted to thank you all for your interest, for your contribution, for your support. And let's keep the fire burning with the B20 Collective Action Hub and the great collective action network that we were able to create. Thank you for that.
Thank you. Thank you, Sabine. The gentleman in the back, he was the first to raise his hand, so maybe a last question. And then during lunch, you can also make more questions.
Hi, Chris Doby from the Ethics Institute in South Africa. I'd just like to hear you talk about debarment. What process do you follow to debar organizations? Because I ask this in the context of our own national treasury that theoretically debars organizations, but due to various procedural reasons, I think after 20 years there's 1 or 2 companies that's been debarred. So, yeah, how do you manage to do it with less bureaucracy?
That's a very good question. As I said at the beginning, the MDBs got together and sort of defined among each other what are, first of all, the principles that we should observe in conducting investigations, because there are due process considerations that we need to follow. Every entity or individual that is subject to an investigation needs to feel that they are treated fairly, objectively, and are given also a fair hearing before they are found to have misconducted themselves. So we have these principles. The investigations teams of the MDBs meet each other twice a year, because there's always new developments, and make sure that we are on the same page with how we deal with challenges that we find in our investigations, access to information, what kind of evidence we can hear, what are the standards for weighing evidence, etc. So there's a very robust international practice developing from this coordination that we're doing together. Then on the sanctions process, once there has been a finding of misconduct, then somebody different than the investigators needs to actually make an assessment whether that indeed meets the evidentiary standard for a finding of fraud or corruption, and what is the appropriate sanction. Again, we need to make sure that the minimum requirements of due process are in place. And for this end, we have developed sanctioning guidelines that set out what the objectives of sanctioning are. That needs to be proportionality, and what are some of the mitigating and aggravating factors that can make a sanction longer, shorter, or perhaps no sanction at all, but only a reprimand, etc. And through development of practice over years and making sure that these bodies that make a determination on the sanction are sufficiently independent from the institution, we've been able, I think ADB alone, debarred 1,700 companies and individuals over the years since we established this sanctions mechanism in the late 90s, early 2000s. And the other MDBs similarly are quite active to various degrees.
Okay, excellent. We just have 1 minute left, so no more questions. Maybe let's just wrap this up by saying, Sabine, you reminded me something I forgot to mention, which is the B20. Yes, this year the B20 has 3 priorities, and among them is precisely incentives for business integrity on one hand, also collective action, of course. And as we were preparing for this session, we noticed that maybe we understand incentives in different ways, sometimes as like more broader motivation type of thing. Sometimes an incentive is a very precise, I don't know, from a legal standpoint, measure that you can take. But here, ultimately, the big incentive is to get the loan. So I've seen countries in record time really adopt their legislative framework, develop and adopt laws in line with international standards just to get that money. So it comes to the gentleman in the front comment about the power that you have. So I'm really happy, I think we're all happy to see that you really go beyond just sanctions and maybe incentives to also build capacity, to really generate those principles, those standards, and the expectations you have from companies. That really, congratulations for that, and I think you can count on all of us to support your efforts. So thank you to my panelists, thank you everyone for your attention, and if you have any more questions, we'll be right here at lunch outside, so we're counting on you. Thank you so much. Thank you.